The S&P 500 peaked, and now the market is waiting. What it's waiting for is the other shoe to drop. That may happen in the next week. Let's take a look at it. Welcome back, everybody. Welcome back, Thomas. I'm back after a week off of being sick. Thanks to Lacey for filling in. We're going to talk about what's going to happen in the market this week, what happened the past week. Thomas, how you doing today?
I'm doing pretty good, Don. How are you?
Always good. Thomas, even though I was off a week with an illness, and again, thanks for Lacey for filling in for me. We're kind of in the same spot we have been for the past few weeks. This was something that was building up over the summer. We had talked about it all summer. We kind of thought, we had a little bit of a summer rally, but we kind of thought the market would be heading this direction. And that's where it's kind of waffling back and forth. There's not a lot to get excited about. There are several things to get depressed about and we can go into some of those. But what's your take about what's happening right now in the market, coming off that little bit of a rally that we had in the summer?
Yeah, I see the market at a peak right now, and we're kind of in this holding pattern. And I feel like the market's waiting for the other shoe to drop. And when I was writing the newsletter this week, it made me think about a video we did earlier in the year, in the spring, about position in May and go away. Right. And so all the people that positioned in May and went away, they've come back now. It's Labor Day is over. We're back in the fall. And so we're waiting to see what those traders are going to do now that they're back. And, the market could rally, but there are definitely some reasons to think that it might not. And the next 2 weeks in particular, there are two catalysts coming up that could have a significant impact on the direction of the market over the next few months.
Give me those two catalysts real quick, Thomas.
Well, next week is the CPI data. CPI is supposed to be at least flat from the previous month, but the headline figure, I saw the consensus this morning, and it's an acceleration from 0.2 to 0.5% on a month-to-month basis. That might not have a big impact on the core number, but it is a leading indicator for future prices. With oil prices on the rise, I can't help but think that CPI is going to continue to rise. This data coming up next week, even if it's not hotter than is currently expected, the expectation is hot enough to keep the Fed on the trigger. The second catalyst is the Fed. That's the week after. The Fed, they're probably not going to raise rates this month, but there's a good chance that they're going to come out with a very hawkish statement, especially if the CPI is hot. So I think that the next 2 weeks are going to be a pretty trying time for the market.
Doesn't it seem like, Thomas, that we spend, first 2 or 3 weeks before the Fed gets together, playing this guessing game, whether they're going to raise rates, whether they're going to cut rates, whether they're going to stay the same. It feels to me, it certainly feels to me personally, and it feels to me the market's almost even tired of what's going on. But we've got another catalyst, and you spoke to it briefly, but I want to talk about it more because we've been talking about it all summer. People that follow us know that we're going to say it right here, but that's the price of oil. Oil prices are headed back up. We put a poll on our YouTube channel, and folks are welcome to go take a look at that, about whether or not oil prices would be a significant factor in inflation reaccelerating. And of course, overwhelmingly, everybody thinks that's so. But where are we going with oil, in your opinion, and what kind of effect would it have on the market in general?
Well, right now, the data that I'm seeing is showing that demand is still growing at a faster pace than supply. That's upward pressure on prices. The price of WTI broke to a new high this week. It's broken out of its trading range. The entire energy complex is throwing off golden crosses everywhere you look. I can't help but think that oil prices are going to begin moving significantly higher in a sustained manner. The last major golden cross in the oil market itself, the rally lasted for 18 or 24 months. I think it was a pretty substantial rally. The oil price more than doubled. I'm not saying we're going to double from here, but we're certainly going higher, and it is going to underpin inflation over the next few quarters.
Bottom line, inflation's not going away anytime soon. Am I right?
I don't believe it is.
Hey, next week, earnings season is basically over, but we do have a couple of companies reporting, and what I want to do here, I want you to speak to a couple of them, some of the larger names that a lot of people on MarketBeat follow, on a lot of watch lists, just widely followed stocks. And I'm going to give you, I want to try this. I'm going to give you a minute on each stock. Give me your take on that, and then we'll wrap this up. Adobe. Let's start with that one.
All right, Adobe. Adobe is a great blue chip business service company. They emerged as an AI leader over the last quarter. The interface that it provides to users is crucial for the interconnectivity of AI and sharing AI data, AI models. That's not even counting the company's own lean into AI services. It's providing its users with several AI services to help them generate content. There's been some positive activity as far as demand growth for the business. The analysts love the stock. It's got a great dividend. I see Adobe moving significantly higher.
Good job. The next one, it sounds like you're looking for a positive report there. The next one that I want to speak on, and again, got about a minute or so left with this video, Oracle. Widely followed name, a lot of traffic on MarketBeat when we write about it. Tell me what you see in there.
Right. So Oracle is a fundamentally strong company, well entrenched in the internet, database management and information. The company has been riding a wave of success that was based on its shift to the cloud. That cloud has since been levered into AI. It's emerging as a critical player in the AI infrastructure as far as data, sharing data, and training models. I expect to see another good report from Oracle. Maybe not the caliber of NVIDIA's, 50% outperformance, but another strong, solid report for Oracle to drive its stock price higher. And I will say that today, while we're shooting this, Oracle's price is moving up to new highs right now. I don't expect it to go anywhere but up from here.
That sounds exciting as well. Hey, everyone, if you're interested in getting Thomas's newsletter on a weekly basis, we send it out every Sunday afternoon, I believe about 4 p.m. Eastern time. We'll leave a link down below where you can sign up for that. Just leave your email there on that link, and we'll make sure that we get it to you. It won't cost you a dime. It's an extensive report, some 2,500 words each week about what the market is doing, what we expect it to be doing. A lot of good information in there. Furthermore, next week we're going to have a new feature where we're going to be featuring individual stocks where our reporters and analysts will be checking in on individual stocks and give you a brief summary of what's going on with those stocks, what we expect, and so on and so forth. If this video has done you any good or served you in any way, we'd appreciate a thumbs up and a subscribe. We look forward to seeing you again, but until then, Thomas,
remember the trend.